In August 2015, China made a single monetary decision that vaporized $5 trillion in global wealth in less than 72 hours. The media called it a currency devaluation. They were wrong. This was the opening move in the largest coordinated wealth transfer in modern history, and it's still happening right now. Within 48 hours, global stock markets lost $5 trillion in value. The Chinese yuan dropped 3% against the dollar, the largest single move since 1994. Central banks across 23 countries were forced to intervene to stabilize their own currencies. Gold spiked $40 per ounce in a single trading session as investors fled to safety. China's foreign exchange reserves dropped $513 billion in just 12 months. This was not a market correction. This was not a policy mistake. This was a controlled demolition, a calculated strike in a financial war that most people don't even know is being fought. And history shows us exactly what happens next. So what really happened in August 2015? To understand that, you need to understand a pattern that has repeated throughout monetary history for over 2,000 years. History shows that no reserve currency lasts forever. Not yuan. And every single collapse begins the same way, with a challenge from a rising power. Let's start with Rome. In 64 AD, the Roman denarius contains 95% silver. It's the reserve currency of the ancient world. Trade from Britain to Mesopotamia settles in denarii, but Rome has a problem. The empire is expansive. Military campaigns drain the treasury. So Rome makes a choice. They begin debasing the currency. By 180 AD, the denarius contains just 75% silver. By 268 AD, it contains less than 5% silver. What happens next? Trade partners begin refusing Roman currency. They demand payment in gold, in goods, in anything but debased Roman coins. The empire fragments economically before it fragments politically. The pattern is set. Fast forward to Britain. In 1914, the British pound sterling controls 60% of global reserves. It is the undisputed king of international finance. But World War I changes everything. Britain borrows heavily to fund the war. By 1918, Britain owes the United States more than the entire British GDP. The pound is under pressure. Britain tries to maintain the gold standard, but the debt is too large. They print money. They devalue. They lose credibility. By 1944, at the Bretton Woods Conference, the world chooses a new reserve currency, not the pound, the dollar. The transition takes exactly 30 years from the moment Britain enters crisis to the moment the pound is replaced. Britain never recovers its reserve status, but here's where it gets interesting. In 1985, another challenger emerges. Japan. The Japanese yen is threatening dollar dominance. Japan is buying up American assets, Rockefeller Center, Hollywood studios, prime real estate. American politicians panic. So the G5 nations, the United States, Japan, Germany, France, and the United Kingdom meet at the Plaza Hotel in New York. They force Japan to revalue the yen. The currency appreciates 50% against the dollar in just 2 years. What happens to Japan? The asset bubble inflates, then explodes. Real estate prices collapse. The stock market crashes. Japan enters 3 decades of economic stagnation. The dollar remains supreme. The challenger is neutralized. Every single one of these transitions followed a 4-stage pattern. Rome, Britain, Japan. The pattern doesn't change. And in August 2015, China signaled to the world that stage 3 had begun. Most people missed it. The institutions did not. So where are we in this cycle right now? To answer that, you need to understand the 4-stage framework that governs every reserve currency collapse. This is not theory. This is pattern recognition based on 2,000 years of monetary history. Stage 1, sound money era. This is where it all begins. The currency is backed by hard assets, gold, silver, or rigid capital controls that maintain discipline. Fiscal responsibility is maintained because there's no other choice. You can't print what you don't have. Trade partners trust the currency because they know it's convertible to real value. The United States enters this stage in 1944. The dollar is backed by gold at $35 per ounce. Every dollar in circulation can be redeemed for a fixed amount of gold. Foreign governments trust this arrangement. The dollar becomes the world's reserve currency because it's as good as gold. Stage 1 is stable, but it doesn't last. Stage 2, debt expansion and the break. Here's where the pattern always shifts. The The dominant power faces pressure wars, social programs, infrastructure spending. The bills pile up. But there's a problem. Sound money limits how much you can spend. So the government makes a choice. They break the peg for the United States. This moment arrives on August 15th, 1971. President Richard Nixon closes the gold window. He tells the world that dollars can no longer be redeemed for gold. The explanation is that this is temporary, a short-term measure to stabilize the economy. But temporary becomes permanent. It always does. What happens next? The money printer turns on. Cheap credit floods the system. The stock market booms. Real estate booms. The economy appears to be thriving. This is the seductive phase. Most people think the good times will last forever. But stage 2 is not growth. It's debt expansion disguised as growth, and it sets up the crisis in stage 3. Stage 3, inflation crisis and challenger emergence. This is where the debt comes due. The government has spent decades printing money, running deficits, accumulating debt. Inflation becomes chronic. Not the temporary inflation of stage 2 chronic, structural inflation that erodes confidence in the currency itself. And this is where the challenger emerges. A rival power looks at the dominant nation and sees vulnerability. They see debt, they see inflation, they see a currency backed by nothing but promises, and they begin building alternative systems. Trade partners start to diversify. They hold less of the reserve currency, they buy gold. They build payment systems that bypass the dominant power's control. The dominant power responds by weaponizing the financial system, freezing assets, using currency as a tool of geopolitical pressure. But this backfires. Every time the dominant power weaponizes its currency, it accelerates the flight away from that currency. Trust evaporates. And once trust is gone, the collapse accelerates. Where is the United States right now? We are in stage 3. And the evidence is overwhelming. The U.S. national debt crosses $35 trillion. Interest payments on that debt now exceed the entire defense budget. The Federal Reserve prints trillions during the 2008 financial crisis, then prints trillions more during the 2020 pandemic. Inflation spikes to levels not seen in 40 years. In China is the challenger. They watch the United States weaponize the dollar sanctioning Russia, freezing assets, cutting countries off from the SWIFT payment system. And China makes a decision. They will build an alternative. This is where August 2015 fits into the pattern. China's devaluation was not a defensive move to boost exports. It was an offensive strike. They triggered a $5 trillion wealth transfer to announce to the world, we are no longer playing your game. We are building our own stage 4 rapid collapse and system reset. This is the final stage. The tipping point is reached. The flight from the reserve currency becomes a stampede. Institutions, governments, and individuals rush to real assets gold, silver, land, commodities. The reserve currency collapses, not slowly, but rapidly. The transition that seemed impossible suddenly seems inevitable. A new system emerges. Sometimes it's negotiated. More often, it's violent economically, politically, or both. The historical timeline from stage 3 to stage 4. 5 to 15 years. Rome took decades, but that was a pre-industrial economy. Britain took 26 years from World War I to Bretton Woods, but we live in a different world now. Capital moves at the speed of light. Information spreads instantly. The timeline compresses. China triggered stage 3 in August 2015. We are now in year 9. If history holds in, the pattern suggests that we are approaching stage 4 faster than most people realize. But here's what most people miss. That $5 trillion that vaporized in August 2015, it didn't disappear. It transferred. And understanding where it went reveals China's entire strategy, what actually happened in August 2015. So let's break down exactly what happened in August 2015, because the mechanics of this event reveal everything you need to know about China's strategy. August 11th, 2015, China devalues the yuan by 1.9% against the dollar. This is massive. China hasn't moved its currency this much in a single day since 1994. Markets are shocked, but China isn't done. August 12th, another 1.6% devaluation. August 13, another 1.1% devaluation. In 3 days, China moves its currency nearly 5%. For a major global currency, this is unprecedented. This is not normal market activity. This is a coordinated strike. China's official explanation: market-driven reform. They claim they're allowing market forces to determine the yuan's value. The Western media accepts this narrative. They call it a desperate move to boost Chinese exports during an economic slowdown. But here's what the data actually shows. This was not desperation. This was strategy. Within minutes of the first devaluation, the Dow Jones drops 1,000 points at the opening bell. It's the largest intraday drop in history at that time. The S&P 500 loses $1.9 trillion in value in 1 week. Emerging market currencies collapse. The Brazilian real drops 3.5%. The South African rand falls 4.2%. The Malaysian ringgit hits a 17-year low. Commodity prices crater. Oil drops from $45 per barrel to $38 in 2 weeks. Copper falls to 6-year lows. Iron ore collapses. The entire commodity complex is in freefall. Global markets are in panic. Central banks across the world are forced to intervene. The European Central Bank makes emergency statements. The Bank of Japan hints at further stimulus. The Federal Reserve delays its planned interest rate hike. And here's the critical part. While everyone is panicking about what they're losing, no one is asking the right question: where did that $5 trillion actually go? The wealth transfer mechanism. Here's what most people don't understand. That $5 trillion didn't just disappear. It transferred. Wealth doesn't vanish, it changes hands. And understanding where it went reveals China's entire playbook. First, it went into Chinese gold reserves. In 2015, China imports over 1,500 tons of gold. Official reserves increased from 1,054 tons to 1,762 tons by the end of 2016. But those are just the official numbers. Independent analysts estimate China's actual gold holdings are 2 to 3 times higher. They're buying through Hong Kong. They're buying through London. They're buying through Switzerland. They're stockpiling gold at a pace never seen before in modern history. And think about the timing. As dollar-denominated assets crash in August 2015, gold becomes cheaper to buy for anyone holding yuan. China devalues its currency and simultaneously increases its purchasing power for the one asset that matters in a currency crisis. This is not coincidence. This is strategy. Second, it went into hard asset acquisition. China goes on a global buying spree. Ports in Greece, infrastructure in Africa, mining operations in Australia, energy assets in Canada. They're not buying financial asset stocks, bonds, derivatives. They're buying real assets, physical infrastructure, resources, things that hold value regardless of what happens to paper currencies. The Belt and Road Initiative expands into 68 countries in 2015 and 2016. Total Chinese overseas investment in 2015 alone, $118 billion. They're building an economic empire while Western markets are panicking about short-term losses. Third, it went into yuan internationalization infrastructure. October 2015. China launches CIP ESTA cross-border interbank payment system. This is China's alternative to SWIFT. SWIFT is the system that controls nearly all international dollar transactions. If you want to move money across borders, you use SWIFT. And SWIFT is controlled by Western powers. It's the financial weapon the United States uses to enforce sanctions, freeze assets, and maintain dollar dominance. China watches the U.S. weaponize SWIFT against Russia, against Iran, against any nation that challenges American interests. And China decides, we need our own system. CIPS launches 2 months after the August devaluation. Yuan clearing banks are established in London, French Seoul, Sijinei, and a dozen other major financial centers. The infrastructure for a dollar alternative is being built in real time. November 2015. The International Monetary Fund adds the yuan to its special drawing rights basket. This is a symbolic victory, but it's also a practical one. It legitimizes the yuan as a global reserve currency. It signals to the world that China is not just a challenger, it's a viable alternative. All of this happens within 4 months of the August devaluation. This is not reactive policy. This is a coordinated campaign. The $5 trillion transfer was the shock that allowed China to accelerate a strategy they've been planning for years. The US response proves we're in stage 3. Now watch how the United States responds, because the response confirms everything about stage 3 dynamics. The Federal Reserve is trapped. They want to raise interest rates to combat inflation and normalize monetary policy after years of zero rates, but they can't. Why? Because the US national debt crosses $18 trillion in 2015, every percentage point increase in interest rates adds hundreds of billions to annual interest payments. The government cannot afford higher rates. So the Fed delays, they make excuses. They cite global headwinds and international instability. The August 2015 crisis gives them the perfect excuse to keep rates near zero. This is the stage 3 trap. The dominant power is forced to choose between defending its currency and servicing its debt. They can't do both. So they choose debt. They keep printing, they keep rates low, and they accelerate the loss of confidence. U.S. debt continues to explode. $18 trillion in 2015, $20 trillion by 2017, $28 trillion by 2021, $35 trillion today. Interest payments now exceed the entire defense budget. The U.S. pays more to service its debt than it spends on the military, on education, on infrastructure. The debt is no longer sustainable. Everyone knows this, but no one can say it out loud. And here's where it gets critical. The United States begins weaponizing the dollar more aggressively. Sanctions against Russia, sanctions against Iran, sanctions against Venezuela, freezing assets, cutting countries off from SWIFT, using the dollar system as a geopolitical weapon. But every time the US weaponizes the dollar, it validates China's strategy. Every country watching thinks, we need an alternative. We cannot allow the US to control our access to the global financial system. The weaponization accelerates the flight from the dollar. It's a self-destructive cycle, and we're watching it happen in real time. Present day, the pattern accelerates, and 9 years later, every single indicator shows the wealth transfer is accelerating. This is not slowing down. This is speeding up. China's Treasury holdings. In 2013, China holds $1.3 trillion in U.S. Treasury bonds. They're the largest foreign holder of U.S. debt. By 2024, they hold less than $800 billion. They've dumped over $500 billion in treasuries. This is not diversification. This is strategic divestment. China is reducing its exposure to dollar-denominated debt because they know what's coming. China's gold holdings, official reserves now stand at 2,264 tons as of late 2024. But here, as the key data point, China increases its gold reserves for 18 consecutive months through late 2024. Not once, not occasionally, every single month. They're accumulating at a pace that suggests they're preparing for a monetary reset. BRICS expansion. The BRICS bloc, Brazil, Russia, India, China, South Africa expands to 9 member nations in 2024. They now represent 45% of the global population and 36% of global GDP. And they're exploring a gold-backed trade currency. Not a gold-backed reserve currency yet, but a settlement currency for trade between BRICS nations. This bypasses the dollar entirely. The petroleum. China launches yuan-denominated oil futures contracts in 2018. These contracts settle in gold, not dollars, gold. This is a direct challenge to the petrodollar system, the arrangement that has forced global oil trade to flow through US dollars since 1974. Saudi Arabia begins accepting yuan for oil sales in 2023. The petrodollar monopoly is breaking US dollar share of global reserves. In 2000, the dollar represents 71% of global foreign exchange reserves. By 2024, it's down to 58%. That's a 13 percentage point decline. That might not sound dramatic, but in reserve currency terms, it's a collapse. The shift is accelerating, and once it reaches a critical threshold, most analysts put this around 50%, the momentum becomes irreversible. The institutional tells. This is where you need to pay attention because the smart money is already positioning for what comes next. BlackRock increases its gold ETF holdings by 42% in 2023 and 2024, JP. Morgan accumulates the largest physical silver position in history. Ray Dalio, one of the world's most successful hedge fund managers, publicly warns of a big debt crisis and shifts 18% of his portfolio to gold. Central banks globally purchased 1,037 tons of gold in 2023. That's the second highest year on record. Central banks don't buy gold because they think the price is going up. They buy gold because they're losing faith in fiat currencies. This is not speculation. This is not conspiracy theory. Every single data point confirms we are deep into stage 3. China triggered the wealth transfer in 2015. 9 years later, they're winning. So what happens next? To answer that, we go back to history. Because once stage 3 begins, history shows the outcome is not a matter of if, it's only a matter of when. Let's look at Britain again. Britain enters stage 3 in 1918. Immediately after World War I, the debt is crushing. The pound is under pressure. But Britain is still the dominant financial power. London is still the center of global finance. The British Empire still spans the globe. Everyone assumes the pound will recover. It has to recover. It's too big to fail. Britain spends 26 years denying the inevitable. They try stimulus. They go on and off the gold standard. They devalue, then revalue. They make every possible policy move to defend the pound's reserve status. None of it works. By 1944, the transition is complete. The dollar replaces the pound at Bretton Woods. The timeline, 26 years from stage 3 to complete displacement. But here's what's different this time. The speed of capital movement in the digital age means the timeline compresses. What took Britain 26 years could take the United States 10 to 15 years. Money moved by ship in 1918. It moved by telegraph by 1944. Today, it moves at the speed of light. Trillions of dollars can shift across the globe in seconds. The lag time between cause and effect has been eliminated. August 2015 was year 1 of the American Stage 3 crises. We are now in year 9. If the historical pattern holds and the pattern always holds, we are approaching the midpoint. Stage 4 could begin within the next 3 to 7 years. The mainstream narrative says the dollar is strong. U.S. markets are resilient. China is struggling with debt and demographic decline. There's no alternative to the dollar. The data says the exact opposite. China is executing a multi-decade strategy that was set in motion long before August 2015. The devaluation wasn't the beginning, it was the announcement. China was telling the world, we're ready, the transition is happening, position yourselves accordingly. And here is the contrarian truth that no one wants to hear. China doesn't need to have a perfect economy to win this. Britain didn't collapse in 1980. They remained a major power. But they lost reserve currency status anyway. Why? Because the challenger, the United States, was stronger, had less debt, and offered a more credible alternative. China doesn't need to be perfect. They just need to be more credible than the United States with $35 trillion in debt, chronic inflation, and a government that weaponizes its currency against anyone who challenges its interests. That's a low bar, and China is clearing it. What happens in stage 4? The transition accelerates rapidly. The flight from the reserve currency becomes a stampede. Dollar rejection spreads from central banks to corporations to individuals. Gold and silver prices spike as fiat confidence collapses. The BRICS currency or whatever alternative emerges begins settling a significant portion of global trade. The US is forced into an impossible choice: hyperinflation to service the debt or default. The timeline. History suggests 3 to 7 years from where we stand today. But remember, the timeline compresses. It could happen faster than anyone expects. The $5 trillion transfer in August 2015 happened in 72 hours. Stage 4 could unfold just as quickly. The pattern doesn't change. Rome, Britain, Japan, they all followed the same 4 stages. The only question is, will you recognize it before stage 4 begins? Let's recap what we've covered, because this is critical to understand. First, China's August 2015 devaluation was not a mistake. It was not a desperate move to boost exports. It was a declaration. China was announcing to the world that they were ready to challenge dollar dominance. The $5 trillion wealth transfer is the opening move in a financial war most people still do know is being fought. Second, that $5 trillion didn't disappear. It transferred into gold, into hard assets, into the infrastructure for a dollar alternative. China used the crisis they created to accelerate a strategy they'd been building for years. They're not reacting to American policy. They're executing their own plan. Third, we are in stage 3 of the reserve currency collapse pattern. The evidence is overwhelming. U.S. debt at $35 trillion. China dumping treasuries. Global dollar reserves declining. BRICS expanding. Central banks buying gold at record levels. Every indicator points in the same direction. Fourth, history shows us what comes next. Once stage 3 begins, the outcome is not a matter of if only when, Britain took 26 years, but the timeline compresses in the digital age, where in year 9, stage 4 could begin within 3 to 7 years, maybe sooner. This is not speculation. This is pattern recognition based on 2,000 years of monetary history. The pattern doesn't change. Only the speed changes. Now, here's what you need to understand. This video is for educational and informational purposes only. It is not financial advice. It is not investment advice. It is not a recommendation to buy or sell any asset. I am not a financial advisor. Always consult with a licensed financial professional before making any investment decisions. The analysis presented here is based on historical patterns and current data, but the future is inherently uncertain. Past performance does not guarantee future results, but here's what is certain. The wealth transfer that began in August 2015 is still happening. The institutions know this. That's why BlackRock is buying gold. That's why JP Morgan is accumulating silver. That's why central banks around the world are diversifying away from dollars. The smart money is already positioning for stage 4. If you want to understand the next phase of this wealth transfer that moves China is making right now, that the media is UND covering, subscribe and turn on notifications. The next video breaks down the BRICS gold-backed currency plan in detail, why it's more advanced than most people realize, why Saudi Arabia's involvement changes everything, and why it could trigger stage 4 faster than anyone expects. The pattern doesn't change. History has shown us the script. Rome, Britain, Japan, they all followed the same path. The only variable is timing, and the only advantage is preparation. Those who recognize the pattern early have options. Those who wait until stage 4 begins do not. The wealth transfer is happening right now. The question is, which side of it will you be on?